what? That crowd, now that we take a much wider shot, doesn't even look that bad. I mean, let's call it like we see it. When we had the tight shot, I thought, my God, there are thousands of people. Let's call it hundreds at the moment. But you can't deny our markets are moving on a possible Greek deal. Nick, are investors about to get bitten if a deal doesn't solidify? We're going to bring in Jack Howe. He's senior editor for Barron's, and Jim Frischling, NewOak Capital Management president. He's got a couple of billion in assets, too. Jim, would you be investing right now in Greece with what's happening outside the parliament right now, but also the rumor that maybe they will come through with some type of offer for their creditors?
Sure. I do expect that we're going to see a deal. And in terms of an investment, I believe the European banks, actually, which are the primary owners of Greek debt, is how I would be recommending playing it. We certainly have been liking U.S. financials, and we think if a deal does come through, it's the European financials that will be the beneficiary. And if for some reason, if our prediction is wrong and a deal is not struck, which again is not what I'm thinking, then it is the European banks that are going to feel the most pain right now, in addition to the folks, in addition to the Greeks, I have to say.
Well, that's a distinct possibility, the big if, right, Jack? And in the end, is this just another head fake by the Greeks?
I think there's still even odds that they leave the Eurozone. I think that they're
What does that mean to people who are watching right now in America?
I'll tell you exactly what it means. Imagine ordinary families in America. Imagine going 3-4 months without your paycheck. Like, how close are you to meeting your budget right now? Imagine just not getting paid for a few months while we figure out what the currency system is going to be. Then when you get paid, it's 50 cents in the dollar going forward. You're talking about a catastrophe. You're talking about goods shortages at stores, shortages of medicine at hospitals. Now, what's the fallout for the broader Eurozone? First of all, we were worried about a meltdown in the South from Portugal, Italy. Look at the bond yields. They're actually falling. That is off the table.
Yeah,
that's not
calmed
going to
down,
happen.
Nick. I mean, it wasn't so bad anymore in Portugal.
And that's exactly right. I think that really the miscalculation on the part of the Greeks were they believed that they were playing game theory, and they thought, okay, we'll threaten you, that we'll bring the system down. And what they didn't realize was that after the European Central Bank backstops all of the bonds of the periphery, that threat went away. And I think that's why they've suddenly come to the realization they don't hold the trump card they thought they had.
Well, if I can, I think when you lend someone, the theory is if you lend someone a little bit of money, you control them. And the Greeks were betting on the fact that when you lend someone a lot of money, they control you. But the fact is the euro is not, the other members are not prepared to let this break. And to Jack's point, I don't think it's 50-50. We've seen this movie before in our own country. The U.S. debt ceiling debate, we've seen it. At the last moment, there will be a deal, and to put this to bed.
Okay, we got to go on this one. But boy, I'll tell you something. This could be still a Greek tragedy or a comedy. Make your pick. We never know, do we? Nick Sargent, thank you so much. Jack Howe, Jim Frischling, you guys are going to stay in. Jeff, we could show a 5-year chart of McDonald's, and you can see that the tastes of Americans are simply changing. Whether it's that they're still eating burgers, but they're the Shake Shacks. Yeah, and that, of course, is something
5 year,
actually that bad.
306%.
Well, let me bring in Jack Howe, because Barron's did a negative piece on McDonald's, a couple of months ago?
Yeah.
Well, that 5-year picture isn't the worst thing I've ever seen.
It's not, but that's the whole point. The stock is at 20 times earnings. Turnaround stories don't start at 20 times earnings. The problem for McDonald's is there's a bloated menu. They sell too many things. The sales per store are very high. But this company is going to have to simplify if it wants to, first of all, make its franchisees happier. They've been sinking too much money into the business. They're not thrilled right now. And improve its service times, things like that. In order to do that, it has to forfeit some revenue. It's a very difficult position to be in. They can't grow the way they are now. But if they start to make too many changes, they would have to sacrifice revenue in the near term.
But Jim, you can't tell me McDonald's is going away.
Exactly. I'm glad you said that.
It's in everybody's portfolio somewhere.
I think, to your point, they missed on the consumer sentiment a little bit. They did. The taste had changed. They underestimated probably their competition. However, they still have twice as many locations as Burger King. Okay, only Subway has 2x the stores that McDonald's has. McDonald's still makes more money, and at this price, they have a 3.4% dividend. So they are a giant. They're not going away, and they will adjust.
The dividend gives you some downside protections, right? You know, one thing to watch out for, watch Starbucks, right? A little over a year ago, I wrote, watch Starbucks become the biggest company, the biggest restaurant in America by stock market value. Back then, it needed a 66% gain against McDonald's to pull it off. Now it only needs a 15% gain.
Starbucks is 40 cents away from an annual high. But S-Bucks is looking very good.
For my entire life, McDonald's has been the biggest restaurant in America by market value. Soon it's going to be Starbucks.
And there's Starbucks. What a nice one-year picture that is. Great to see both of you. Jim Frischling is here, and he picks and chooses very carefully. You know, what do you think of what Patrick and Scott are saying here?
Overall, I agree for the most part, particularly Scott's comment about the Fed. I think last week they signaled that they are going to move, but actually it's going to remain accommodating. It's going to remain a good tailwind for stocks. So we agree with that view. We also then look at existing home sales. You commented 5.5-year high. And let's not forget the healthcare M&A activity that we're seeing. Again, when companies are doing M&A activity and they're looking to buy each other and deploy their capital, I think that's a bullish sign, again, for stocks.
Anthem wants to buy Cigna, Jack. That was the big story today, but Cigna says, nope, that's not a good enough deal for us.
Yeah, there's been a lot of froth in healthcare, and I think the group is starting to look expensive. But look, just because it's a pricey stock market doesn't mean there are not bargains out there. Our Barron's cover story this week is about airline stocks. You can buy these stocks for 5, 6, 7 times earnings
They're all
right
jumping
now.
today.
Benefits of a huge decline in fuel prices and a much consolidated industry.
Patrick, what are you buying? Quickly.
So, you know, we actually love the Barron's cover story because we own airline stock pretty big. We like American and Delta. I think if I have to keep going with the Taylor Swift references you've had going, a lot of investors have bad blood towards the airline sector, but they're a great opportunity.
Perfect.
We also, you know, here at Brandywine, we're contrarian investors. We look for value, or we're contrarian where it makes sense. So some of the names that maybe aren't on people's radar screens, we really like Santander Consumer, the auto lender, and we really like Chicago Bridge and Iron, which is a engineering firm. It's building nuclear power plants. A lot of controversy around it, but that really presents the opportunity. Very undervalued stock, we think, at this point.
Hey, listen, it's great to see you, and sure, we'll end on a Spanish bank. That's a little scary, but it's great to have all of you. We appreciate it. Thank you to Jack and Jim, Patrick and Scott. That's it for Countdown to the Closing Bell.